Hello and welcome to Business Incorporated live on Channels Television. The Tuesday trading is moving along and not looking bad right here in Lagos, Nigeria. Here are the stories you should be looking at. African startups raise more funding in 2025 than in 2023. AFDB commits $30.3 billion to economic transformation in Namibia. And copper eases from record high as investors await signals from the Fed. Great to have you join us. I'm Will Ibang. Let's check in on the commodities market as always. You see oil prices edging down Tuesday, extending losses from the 2% drop in the previous session, with markets keeping a close eye on the peace talks to end Russia's war in Ukraine and a looming decision on U.S. interest rates. Let's look at oil prices now. We see it's down 0.21%. That's Brent crude at $62.34 a barrel. And we see WTI down 0.29% at $58.71 a barrel. Now, Ukraine will share a revised peace plan with the U.S. after talks in London between its president, Volodymyr Zelensky, and the leaders of France, Germany, and Britain. But according to sources familiar with the matter, the group of 7 countries and the European Union are in talks to replace a price cap on Russian oil exports with a full maritime services ban in a bid to reduce Russia's oil revenue. Also on the radar is the Federal Reserve's policy decision due tomorrow, Wednesday, with markets pricing in an 87% probability of a quarter-point rate reduction. Now, lower interest rates typically are a positive driver for oil demand, given decrease in borrowing costs. Though some analysts are cautious about how much impact this could have on oil prices for now. But let's look at gold prices now. Let's see any better, but they were flat on Tuesday as investors. We saw a largely priced in, the rate cuts that they're bracing for signals that the U.S. Central Bank may pursue a milder than expected easing cycle in its 2-day policy meeting, which is starting later in the day. Let's look at spot gold. That held steady at $4,189. $17 per ounce. That's, you can get that on the screen. And then we have, we see gold futures for December delivery was also flat at $4,218.50 per ounce. Investors are largely positioning ahead of the Federal Reserve's policy meeting, Wanda senior analysts are saying so. But let's look at the other metals. See spot silver up 0.2%, palladium's also up 0.4%, and platinum's also up. Platinum's up 0.4%, palladium up 0.7%. But last week, data showed that the U.S. personal consumption expenditures, that's the PCE price index, the Fed's preferred inflation gauge, landed in line with expectations, while consumer sentiment improved in December. Now, private payrolls for November recorded their sharpest drop in more than 2.5 years, but jobless claims fell to a 3-year low for the week ended November 28th. Meanwhile, we're seeing what we're seeing for the prices there. Let's look at other metals now. Copper, we'll see that easing after, record highs, that it gained, retreated from that all-time high as investors turn to caution before the meeting that's going to happen with the Fed tomorrow, starting later today, but we'll see that decision coming tomorrow. Now, industrial metal fell as much as 0.7% on the London Metal Exchange. The Fed is expected to deliver a quarter of a percentage point by tomorrow, but any hints at a slower pace of easing in 2026 could hurt risk assets, including commodities. Now, copper is a metal critical for electrification and the energy transition, and it has gained more than 30% on the London Metal Exchange this year, and the rally has accelerated in recent weeks as materials rushed to the U.S. to front-run possible import tariffs, triggering, we see, tighter supplies and record premiums elsewhere. Now, swap traders are leaning towards 2 further Fed cuts by the end of 2026, down from 3 signaled a week ago. Divisions within the central bank have become increasingly apparent as the U.S. wrestles with still high inflation and a lack of data following the longest government shutdown in Washington's history. Now, let's look at other stories now. In Africa, we see the African Development Bank has committed $30.3 billion to support Namibia's economic transformation agenda, marking one of its largest financial engagements in the country to date. And the announcement was made following high-level discussions between Namibian officials and an AFDB delegation, which highlighted the bank's long-term partnership with the country and its role in supporting strategic sectors. And the new commitment will focus on boosting renewable energy, enhancing water security, improving transport infrastructure, which is very important, and strengthening private sector growth. Now, according to the AFDB, the funding package aligns with Namibia's development priorities, including industrialization, youth development, and green economic growth. The bank emphasizes that the investment will help position Namibia as a key player in emerging industries such as green hydrogen and critical minerals processing. And let's see other events that are happening right now in Africa. African startups have achieved a major funding milestone in 2025, and that's raising more capital this year than the entire 2023 funding total, according to recent industry reports. The surge in investment reflects growing global interest in the continent's tech and innovation ecosystem, driven by sectors such as fintech, health tech, e-commerce, and renewable energy. Now, analysts say the increase also signals improved investors' confidence in African startups' potential to scale and deliver sustainable returns. Now, venture capital firms and angel investors have actively supported early and growth stage companies, contributing to record-breaking funding rounds. Experts note that strategic partnerships, expanding digital infrastructure, and policy reforms in several countries have further fueled the investment uptick. Now, let's have more discussions about what's happening in Africa. And we're going to be looking at one of our commodities, cocoa. We're joined by FDC's analyst, Tomiwa Ajewale. It's good to have you on the show, Tomiwa. Let's talk about what's happening in cocoa. Tomiwa, are you there?
Yeah, good afternoon. Thank you for having me.
It's great to have you on the show. Tomiwa Cocoa, we see, is one of Nigeria's major non-oil export earners. We see generating over $300 million just in the second quarter, just in revenue for the country. But we saw also there was a price surge in cocoa by 127% in 2024, and we saw that average in price about over $7,000, $7,300. But right now, there's been a 52% drop in 2025, and we're down to about $5,700 per ton for cocoa. Now, if this downtrend, if it does persist, how do you see, how far lower do you see the price of cocoa falling to?
Yeah, so as you rightly said, in 2024, global cocoa prices skyrocketed to record highs, about reaching almost $12,000 per ton, and this was mainly because of supply constraints. Then we were global economy was struggling with the El Nino weather disruption, and so that impacted Ivory Coast, Ghana, and total supply actually fell about 13%. But now in 2025, we are seeing that production is increasing. The EIU forecast about 7% increase this year, and another 7% increase next year. So because of that, prices are falling. It's currently about $5,000 per ton, and we expect prices to continue to come down. Although prices are going to continue to come down, we don't expect it to reach about $2,000 per ton, 3,000, which has been the record prices that have been in the last 10 years. So, even though cocoa prices are falling down, we still expect it to be a little bit higher than the historical average. For Nigeria, while lower cocoa prices is not good, since cocoa is our major non-oil export earner, the fact is still that cocoa exports is just about 2% of our total export earnings. So we don't really expect it to have that much impact on our export earnings or our external balances. But there's a key risk because oil and gas accounts for about 80 to 90% of our export earning. And in 2026, the forecast are the oil price to average around $55 per barrel, which is lower than the current $62 per barrel. Also, by the time the CBN starts, reusing interest rates in 2026, there's a risk of capital flight. So by the time you take these two or three factors, which includes the lower cocoa prices, there's a little bit of risk on our external balances and export earnings. So there's which could put pressure on the naira if all of that happens. So those are key risks that we have to look at.
Okay, but you said something now. You said it's just 2% of our export revenue, and it's not a lot. The country doesn't depend on it for its revenue generation. But we have states in Nigeria that are leading cocoa producing states. If this price continues to drop, what would it do for their internally generated revenue and also their fiscal planning in terms of their budgeting and all that?
Yeah, so I mean, if you look, we're looking at Nigeria, we're looking at states like Oyo, Ondo, Ogun. These are states where cocoa is a major source of revenue for them, and with these lower prices, that means that their revenue is going to fall. If you look at their internally generated revenue in 2024, when prices were up, their revenue increased. an average around 30%. So, with the lower prices, their revenue is going to fall, and that's also going to impact their spending. But we expect to see differences in states like Oyo, where cocoa is not necessarily the major focal point. The impact on revenues may be limited. But when you look at states like Ondo, where cocoa is, is very, very important in their revenue, that state now has to be very careful because, you may have to put a pause on some capital spendings that you plan to before. And even if you're not looking at your cash flows well, now that the export earnings or revenue are going to be falling, you might have a little bit struggle if you're not prepared well to for your recurrent expenditure. So, and also when revenue is falling, this increases the fiscal deficits of the states. And apart from even the government, even the farmers themselves, we are going to be seeing lower income for them now that prices are falling. So yes, there's a key risk in that sense, but it's important for us to move just from selling raw cocoa to move to higher value chain. That we'll be able to get more foreign exchange and still booyah the earnings and revenue.
Okay, but just very quickly, where are we at in when we talk about the forward integration in the cocoa value chain? We've seen this price drop now. Is it going to still be economically viable to pursue this pattern of production or a way forward in Nigeria's cocoa industry?
Yeah, so ideally with prices not falling, that reduces the incentive for people to move into the sector because with prices falling, the margins are going to fall. But when you look at the Nigerian economy as a whole, and when we're not looking at the short term but long term, we still have to move forward in the value chain. It's still definitely economically viable. By the time we stop exporting just raw cocoa and we are processing it, that way we're generating more export earnings. Two, which is key, is that we are creating jobs in the manufacturing sector, which is important to for employment and also to increase revenue. So yes, it's still economically viable, but regardless of that, to put that into process, we still need to pay attention to the fact that such industries require good power, they require good logistics, they require good market integration. We need an organized primary these cocoa farmers organized so that we can have quality and constant supply of cocoa seeds, so that way the manufacturing industry will be able to be viable and to operate efficiently, and that way we can increase our export earnings while also creating jobs and opportunity, and most importantly, diversify the economy away from oil and gas.
Thank you, Tomiwa. We'll look forward to that. Tomiwa Ajewole is analyst with FTC. Thank you for joining us on Business Incorporated.
Thank you.
We'll take a quick break now. We'll come back. Business Incorporated continues. To stay with us. Welcome back. You're still watching Business Incorporated, and we're heading straight to the markets to see how the equities market performed at intraday across Africa. We're looking at the big fours here, talking about Nigeria, Egypt, Kenya, South Africa. Let's look at Nigeria's NGX. We see it's up 0.04%, still at 147,000 points, 485. We're hoping we hang in there and close in the green. But we'll have Ambers Omodion is an analyst of the Chief Research Officer in Investigator Consulting to talk about what's driving this green close and why we will if it will be sustained at the close of business and other matters that are coming up in the exchange. Now, Ambrose, good afternoon. It's good to have you join us.
Good afternoon. Thanks for having me.
Ambrose, we just very quickly, just tell us what's happening in the markets, what's driving stocks at intraday.
No, as the year is just gradually winding down, investors are just pushing their portfolio, especially we're seeing increasing interest in the insurance sector and other local stocks ahead of year end. And don't forget that by January, we'll be seeing an audited account. Ahead of that, investors are looking at where they can shop now and pushing for those numbers to come to give insight where they should expect dividend. But for those companies that will know that, yes, they don't result until February, so to see their dividend as from February. I've been seeing their quarter already. We'll know where this are heading for. Seeing this interest in insurance company, we'll tell you that people are really looking at what the policy of the corporation is going to impart on this sector, and people are taking ahead of that. Don't forget that before now, we have seen rally in the insurance company before pulling back, but we are seeing gradual interest now in the insurance sector.
Okay, but yesterday there was a Capital Market Committee meeting, and where the SEC DG, Momotimi Agamas, did mention that the market is pushing for a same-day settlement. I just want to know how realistic is this, especially with smaller operators and retail investors? Are they able to keep up with these rules and these digital reforms that are coming up?
Well, I think they will say kudos to the SEC and their leadership. Yes, they are trying to renovate and also innovation that we bring in a technology to play in the industry, which also will be yearning for a long time. But I think they need to do the needful by giving education to the people first. It's not just changing. We're moving from T plus three to just T plus two. We're already looking at taking 2 plus one. Yes, I know that Nigerian banks are very strong and solid now to to push the T plus one and all, but we need education so that people will know how to take advantage of it. Yes, it's also going to provide liquidity in the market, but the liquidity, how far will it impact the market? Liquidity of selling and buying does not look more. Liquidity that attracts new investment that matters. Not just we are selling and getting it initially. More money coming, more Nigerians entering investment cycle. As we speak now, about 200 million Nigerians. How many is playing this market? How are they taking advantage of these technologies we're introducing to come back to the market? That means we need to take the technology for them, give them proper education, how they can take advantage of this technology, and also create wealth for themselves, and also make the market become heavy or big or large as we expect it to be. Also, we're looking at going to 2026. We need to see new listing. But how this technology is going to facilitate those new listings is also another very important thing. And also, in an environment where clarity in policy is not there, I tell you that clarity is king in any economy. We're seeing policy of capital gain here and there. As we speak now, where the economic managers have not come out to say this is where we are standing, in capital gain. I think that is clearly the market need now. All these innovations are good, but I believe that regulators, both SEC and NGS, should stand and see where are we going. Because if foreign investors are leaving because of this, and local investors are starting on the fence, we need to tell them where this we are starting from 10% to 30%, are we coming back to 25, are we coming back to 15, or we're spending that? Let's make it clear. And that's why when you give clarity, people follow it. But when there's no clarity, people are not going to any doubt. That's why you see confidence will start dwindling. And when confidence dwindles in the market, it will extend from the market to the economy, to the politics. That is where it works.
Definitely, Mr. Ambrose Omodio, and clarity in the market is important for investing. Thank you so much for joining us on Business Incorporated and giving us your perspective.
Thanks for having me.
So let's look quickly to the other markets now. We see South Africa down 0.42%, EGX in Egypt down 0.13%, and the Kenya trading Monday's trading session in the red 0.26%. Let's look at Middle East markets now very quickly and see how they performed. Dubai was up at intraday 0.08%. We see Abu Dhabi also up 0.23%. Let's see Saudi, the Tadawul, that's a green 0.34%, doing great. Qatar is also in the green 0.14%. Let's look at the US markets, how they perform. Nikkei up 0.1, down. The Dow Jones is down 0.45%, and this is because investors are taking caution, waiting to see the decision the Fed is going to take tomorrow when it makes the decision. And S&P 500 also down 0.35%, and Nasdaq also down 0.14%. This is coming despite the approval of Donald Trump regarding NVIDIA. But well, let's see how Asia markets performed at the close of business today. Nikkei, that's in Japan, was up 0.14%. Kospi in South Korea down 0.27%. Hang Seng in China 1.29% down. And let's look at other markets in that region. Shanghai in mainland China is down also 0.37%, and the Nifty 50 in India is down 0.57%. Basically a red market in Asia. But let's look at what Europe is going to be given to us, and we're joined by Chiponda Chimbelu, is our Deutsche Welle correspondent in Berlin, joining us to give us what the markets are telling us in Europe. Good afternoon, Chip. What's going on there?
Well, European shares are mostly flat today, and that's what we've been seeing with the European stock 600, which is struggling for direction ahead of the US Fed policy meeting. But the DAX here in Germany is actually trading higher. It is up around 0.3%, and it is being buoyed by industrial stocks, which are gaining today, led mostly by defense companies. And that comes after a report by Bloomberg News that German lawmakers are set to approve procurement defense contracts worth a record 52 billion euros next week. So the upward journey looks like it's going on for Germany's biggest arms maker, Rheinmetall. Its stock was actually trading as high as 4% higher in today's session. But of course, all eyes are on the US Fed meeting. In recent weeks, of course, global markets have been gaining because of growing expectations that the US Central Bank will cut interest rates.
Definitely we'll keep an eye on that. But to another topic that is very, very disturbing. More and more companies in Germany are seen shutting down operations, and the trend shows no sign of slowing. And we know that in 2024, we saw about 200 companies shut down, and succession for companies is also a problem. Just how bad is Germany's corporate insolvency?
Well, the number of insolvent companies that are insolvent, which is unable to meet their debt obligations, has risen to the highest level since 2014, Will, and nearly 24,000 companies are projected to file for insolvency by the end of this year, and that is 8% more than last year, according to Credit Reform, which is one of Germany's leading credit bureaus. Now, so far, most German firms don't seem to be benefiting from the billions in debt that the government has taken on since loosening government borrowing rules earlier this year. And the economy here has, of course, been historically powered by its small and medium-sized companies. Now, according to Credit Reform, heavily indebted companies are struggling to get new loans in the high interest rate environment in the Eurozone. And they, of course, also face other structural challenges, which include high energy prices and red tape.
But what impact are these insolvencies having on the economy?
Well, the economic damage of the insolvencies is expected to be around 57 billion euros this year alone, and up to around 285,000 jobs could be at risk of disappearing this year as a result of the businesses going under. And this is, of course, also having an impact on the finances of German households. It does, of course, mean more ordinary Germans were unable to pay their bills, and they were also more likely to file for bankruptcy this year than in 2024. Now, Germans are, of course, more uncertain about their economic prospects, and they are also spending less as unemployment rises. And of course, the auto industry, which is the country's biggest private sector employer, continues to announce plans to slash jobs and cut costs. So that's also part of the wider economic story here. Germany needs to become a more attractive place for doing business and investing. But of course, any structural reform is a political gamble, because any major reform does mean some pain for a share of voters before it has any potential benefits. And with Germany's, of course, healthy debt to GDP ratio, that reform, of course, doesn't feel as pressing as it should be.
Very frightening and scary outlook there, Chief. But we keep our fingers crossed that things will turn around very soon. Thank you so much, Chiponda Chimbelu, our Deutsche Welle correspondent right there in Berlin.
Thank you, Will.
Now let's look at some crypto now. Let's see what's happening in the crypto space. You know, crypto is, well, picking up right now after a lot of regulations are coming into place. We see Metacom Pte. Limited, a Singapore-based regulated stable payments and treasury infrastructure provider, has raised markets, has raised the compliant digital settlement systems across all systems. Now we see the raise was backed by major Asian institutional investors, and it marks one of the largest pre-rounds this year for licensed stablecoins payment firm. It follows Metacop's recent launch of StableX, network, and a lot is going on there. So we see Libya is cracking down on illegal Bitcoin mining, and that the Libyan authorities, they've intensified their crackdown on cryptocurrency mining amid a booming yet legally ambiguous sector that has made this country a regional leader. Now, in November 2025, we see prosecutors charged 9 individuals operating Bitcoin mining equipment inside a steel factory in Zlatan, sentencing them to 3 years in prison and ordering the confiscation of their machinery and the return of illegally generated profits. Let's look at what's next in the crypto space. So basically Libya, we see, okay, that's what we have for the markets. But we're going to be back tomorrow for more on Business Incorporated. Thanks for watching. We'll keep you posted on the highlights of today's trading and tomorrow's markets. I'm Willie Bong. Thanks for watching.